TG Watkins here. Let's see, it's November 27th, 2023 when I'm recording this, and we're going to be talking about what is the Santa Claus rally and what is my 2024 outlook. But before we get into that, just want to make sure that you guys know that we still have our Black Friday sale going up until December 1st. I think we had some pretty good activity, so we want to make sure everybody still was able to get in. I know my wife was pretty busy doing a lot of Black Friday sales shopping, so maybe you guys kind of need to come back around and pick up more of the business-oriented stuff. She got, I'm sure, got some good clothing and cosmetic stuff and whatnot, since they run some really big sales around now. All right, so just remember simplertrading.com/flash sale. You can go there, and BFS23, Black Friday Sale 23 is the promo code. All right, so let's kind of dive into this. Remember, we're going to be talking about what is, let's see, I've got get that moved over. And we get that here. What is the Santa Rally and what is my outlook for 2024? So what I decided to do is actually go back and look over about a decade. So I went back and kind of did between December 1st and then let's see, February 1st. So let me go back and I'll show you guys what each of those looked like, and then we can talk about them. Let me get this open here. Let's start with 2023 or 2013 rather. So 2013, and you guys will see these three arrows, and all three arrows are on the exact same date. So every screenshot that you see going forward, it's going to be December 1st, January 1st, and February 1st, basically trying to just cover those 2 months. And the idea of the Santa Claus rally basically is that the market is bullish going into the end of the year. Now, that's kind of a moving target. And this, sure, there's some seasonality involved and all that kind of stuff. And, the bigger traders, hedge funds, all that stuff, institutions, they want window dressing, basically. They want their bonuses. They want the market to look good. They want to end on a high note, all that kind of stuff. So that's the idea behind it. Now, as it turns out, you'll see through even the last 10 years, it's around there, but it's not always super consistent. And the Santa Claus rally can kind of be a moving target, basically. And so something like this, you can see that there was a rally right here, kind of from December. I mean, it was already starting, but December, and then it did pull back significantly going into the end of the year. So that would kind of belie the point of the Santa Claus rally, because usually a lot of people think about the Santa Claus rally either being between Christmas and New Year's or right around Christmas going into New Year's. So the last week, last 2 weeks. But as I said, it's a bit of a moving target, and a lot of people can kind of call the Santa Claus rally basically any kind of bullishness in December and into the end of the year. The other thing to note is that a lot of times the market is also bullish in January. So that's another good thing. And sometimes you need to, there's the tax loss selling, you get other things, and they're going to be, the market can kind of be a little bit weird. And then you start fresh, and then the market can go back up because everybody was kind of trying to balance their books and get everything figured out. And now they can start fresh on the new year. So do keep that in mind. There can be a little bit of squirreliness right around that the holiday season in there. So let's then go to 2014. And you can see in 2014, well, there was a huge dip and a huge correction going in the middle of December, which means that technically the Santa Claus rally did happen, because you can see in the last week or two of the market before the new year that there was some bullishness. So if you kind of just look at that clip, yeah, it works. But you kind of have to say, well, honestly, December was flat from where it began to where it ended, and there was a huge dip in between. So, yes, it worked, but you also have to think about what was the whole experience going into it. And in this case, January was kind of like a nothing, so not much to mention there. Then we can go over 2015. And you look at December for 2015 and you're thinking, well, that wasn't very much. That was kind of bearish. That was not a good December. But again, if you look at the last few days of December, there was a bullish run going into the end of the year. So that would be your Santa Claus rally. Okay. And that's kind of the thing. Sometimes it can be just saving the last little bit of a not so great month. And that's why I'm saying, like, yeah, Santa Claus rally exists, but it can be, like what is it really? It just depends on each year. And then here, January, not so good. So that one definitely got crunched onto the new year. So that was 2015 going to 2016. So let's look at 2016. This one, the Santa Claus rally was kind of the whole thing. So again, you start off December with a bang, and you kind of keep it level. It did pull back, kept level, and then there was just a tiny little dip, and then it's hard to really see here, but maybe there was like a 2 or 3 day move up at the end of the year. But overall, December was generally bullish, and that's another thing we tend to see November and December bullish because of those are the strongest months of the year. And so we do look at that. We want the end of the year to be strong. Again, window dressing, numbers want to look good. People want to get their bonuses, all that kind of stuff. So in this one, I would say that December was bullish. There wasn't exactly a Santa Claus rally, but I have a feeling that stocks were doing pretty well during this time, even though there was maybe a little dip just at the very end of that one. And then I guess you could see here, December was also, or January was also pretty decent. Even though it didn't say go up, this was all pretty positive, and you can see that it then went up after that. All right, so then we come over to 2017, and again, here was December, pretty bullish. Now, it doesn't look very exciting, but I bet that the market was doing pretty well during this time. Individual names probably doing really well during all this, and that was doing well, even though the market kind of looked like it was going sideways for most of it. And then you could just start to see that there was some bullishness at the end of the year. So again, I would say that December was bullish, and that there was probably a Santa Claus rally. Then you look at January, and January kicks off and goes with a bang. Unfortunately, then February, not so much. And remember, February is also seasonally weak. And I think that tends to be because once you have November, December, January as strong months, you're bound to get a pullback because 3 strong months and the market needs to kind of do some correcting. All right, then we go down to 2018. Now, 2018 was notable because the Fed was raising interest rates and the market was throwing an absolute hissy fit. And so we were like, okay, I guess everyone's making jokes about Santa Claus getting lost or getting blown up or running into a cliff or something like that, because that's what the market was doing. It was just falling off a cliff like that. So yeah, there was no Santa Claus rally. Some people kind of wanted to consider maybe this bounce off the low, the Santa Claus rally, but obviously it was just a bounce in a downtrend at that point. When I remember trading this one specifically, and it was the new year. Basically, January 1st or January 2nd, whenever that was, the Fed changed their tune and said, okay, we're gonna stop raising interest rates. And the market loved that. So the joke back then was that Santa was he got lost and he was late. But overall, yeah, there was a bit of bounce. You can call it the Santa Claus rally, but really it was the Fed when they stopped raising interest rates, and the market just totally shot up from there. So then we go to 2019. We're in a pretty strong bull market in through here, and here's December right there. And yes, you could just basically say all of December was bullish. So there's your Santa Claus rally because the whole thing was doing pretty well. Sure, a couple days right at the end started to pull back, but really, I mean, there you go. There's your Santa Claus rally doing pretty well. And you can see even January was doing well, of course, getting a little bit overbought, needing to do a pullback. And then we all know what happened in February, March of 2020. But again, it kind of goes with the seasonality that February tends to be seasonally weak, and that's usually because after a very long bull run, the market needs to correct. This one just happened to have some extra worldly events going on. All right, then we get into 2020. And here you go, December. Again, doesn't look like much, but underneath the surface, it was probably, well, obviously it was doing well. We know that the 2020 was really good for stocks in general. But this was good. I mean, the market was moving up. It was healthy. Even if it was kind of moving sideways, it was still moving up, and it was going sideways into support. And you could say right here was probably the Santa Claus rally, because you could see the market was up for a few days going into the end of the year, and that would be worthy of consideration of a Santa Claus rally. And then everything else doing pretty well. Again, January, nice bullish move up. Yes, there was a correction. And then here's February starting to roll over again. So just remember, February tends to be seasonally weak. All right, then we come into 2021, and this is when we start entering the bear market. Now, you could look at December, and you could say that, sure, December is actually pretty good. You could see we started low, ended high. So yes, that worked out well. But this was pretty much everything was starting to melt down inside. The internals were not doing well. We know this, the small caps had already gotten shot. The big boys were starting to show some topping patterns. And of course, then we had January, and that was when they rolled over. Now, this is kind of where you get the idea of market manipulation, because it seems like the big traders, the hedge funds, the firms, they're like, oh my gosh, can we just hang on to the end of the year so that the market stays up and stays good, and then we can close our books, and then we can just let it all go? Because I mean, think about it, from December to January, quite the change. And somehow, the big powers to be were able to make the market do what they wanted, just hang on to it just long enough in order to close the 2021 books and then go to 2022. Just like if we're gonna dump everything, if like everything is gonna go, let's put it all on 1 year and let's not try and screw up a decent year. But you can also see right there, nice bullishness into the end of the year. There's your Santa Claus rally. Yes, it started from a dip, but hey, the market likes to do dips and moved up from there. And then let's go to 2022. Now here you could see that December was not that great. Okay, yeah, we definitely moved back, and actually, this is one of those Moxie patterns that I talk about quite often. So anybody who's familiar with my teachings, you'll see this, or this should stick out like a sore thumb, really. And so it made sense that from a technical standpoint, just from the charts, that price was going to move down. So yeah, this wasn't much of a Santa Claus rally. In fact, we really just kind of had it be neutral, and possibly you could maybe say like we had 3 or 4 days right there as a Santa Claus rally. Again, they're not always awesome. They kind of move around, but as long as the market is slightly bullish going into the end of the year, a lot of people will consider it a Santa Claus rally. So the fact that maybe we didn't just go down and we kind of held here could be considered Santa Claus rally. And this again was a very interesting one. This really set off the market because going into the end of the year, in this case, since we were in a bear market, remember just in 2021, I said that the powers that be, the big traders, the hedge funds and institutions were trying to keep the market up just so they could close 2021 with a good book. Well, 2022 was such a bad year that they probably wanted to close the market and just sell all their stuff and take their losses. Like, look, if this is going to be a bad year, let's just throw everything in the kitchen sink into this, and so we can just wipe 2022 off and just put all of our losses on that point. And so, from a macro perspective, I have a feeling that is why the market started moving down like that. They're just selling, getting rid of the crap. Like, let's just move on, call it a year, and let's go. Because if you look at 2023, we started off with a bang, and that was actually where we started to move up with the market, and a fair amount of things actually started doing better at that point. So just kind of put 2022 to rest. So that is pretty much where we are. So then we have to ask the question, well, what about this year? Well, let me bring us over here, and we can see that we've had a really, really good November. So I think it's going to be a couple things. Number one, we've had a great November. Okay, so how can we manage a Santa Claus rally in December when we are all the way up here? Kind of like one of those years that I showed you where it started strong, came down, and then ended strong, kind of like that. I would not be surprised if we do something like that. Maybe not as big of a downdraft, but this is way too overbought. We are still up there in kind of the nosebleed section. We definitely need to cool off. Now we could cool off in kind of a gentle way, kind of come down a little bit like that, and then we can continue going like that, and we can actually end higher and stronger than we did at the beginning of December. That's a possibility too. Even if it comes down, maybe bounce a little bit, come down a little bit more, and then we start to move back up, I'd be okay with that too. I would imagine that the market does seem good. Obviously, I mean, look at what November looked like. We also went through, if I zoom out here, we went through a 3-month correction right there, and that produced about a 10% correction. So roughly, you can see that about 10%. Okay, so I think that we are set up nicely for the end of the year. Probably even going into January. We'll have to see. February is always seasonally weak, so we'll probably get a bigger correction by then. But yeah, hard to argue. I mean, we are up right back here at previous highs. The Nasdaq is making new highs, and we just need to see that IWM start to kick in too. It's pretty much done going down, I think. So let's look and see if there's going to be some sort of correction like that, or pullback rather. Because this was a correction. I'm looking for a pullback because this is simply too bullish. But what we need to do is we need to buy ourselves space in order to go up at the end of the year. It's going to be really hard to go up from here. Okay, there's just no more room. So we probably need to like blow off some steam, kind of put in a footing here, and then we can move up towards the end of the year. And that is something that I would be looking for. And then so that kind of takes care of the Santa Claus rally for this year. Now, if we zoom out even further and I come over here and we say, well, what about 2024? Well, let me first say, of course, anything's possible. And there is also the possibility of kind of a double dip. I think that the market right now is in bullish mode. I also like that the market recently just pulled back and tested support on the higher time frames. Like this, everything is firing on all cylinders as far as the indexes go. Now, underneath the surface, not everything's super great. They're starting to warm up. I think it's going to take a little bit of time, but from the index standpoint, this is great. The fact that we had a 3-month correction, 10%, pulled right back to support and pulled back to moving averages and then starting to move back up. Yeah, everything is looking pretty good. We've got squeezes going on. The Moxie indicator's above zero. We just got off the floor with the stochastic. The DPO is up. Like, everything is looking really good as far as the higher time frame stuff. So I do think that we're going to continue to carry this. Basically, my rule is as long as price is over the monthly 10 SMA, we're bullish until we get overbought and need some sort of bigger correction. Now, the other side of this could be, like, as I said, double dip. The reason that the market is doing well right now, I think, is because, well, we've kind of got inflation under control. It's not perfect, but it's definitely under control. It's not this spiraling out of whatever that everyone was concerned about. Like, yeah, it's still a thing, but it's not totally terrible and all that. The other side of it is that the Fed has raised interest rates a huge amount. Okay. And we all know at some point that they are going to reduce interest rates. Now, what usually happens is when interest rates get reduced and turned back, well, that tends to say that the economy is not doing well. And then that's when the recession is and all that kind of stuff. So, right now, the market could be forward looking, knowing that they're going to reduce interest rates, which they want, which is good for the market because they want lower interest rates, and that could be what pushing things up. But because a reduction of interest rates mean that the economy is bad, well, if depending on how bad the economy is and how bad the recession is, then the market could then suffer from that. So that's why I'm saying we could get some sort of double dip situation. Up right now because of future planning, but then down later because of the actual reality of a struggling economy if that were to happen. So it's a little too far out there to really say and to fully predict and all that. But I think the numbers, the seasonality, the higher time frame moving averages and the higher time frame charts and everything I see is saying that we should actually be doing well. Plus, when you look at, let me just go over here, some of the bottom feeders, and you look like this, here's the ARK ETF. They're pretty much done going down. Now, they're having a hard time really getting going. They've had a couple spurts here, but what I'm looking at is the bear market is done. This was the bear market. This was the correction. Now we were building a base. Now, I don't know how exciting we are going to be going to the upside, but this is at least holding steady, and it seems to me the only other direction is up eventually. So that's why I'm leaning towards the upside, because basically everything has just been demolished and all the froth has been taken out. And I just don't really, it's either more sideways or up, but I just don't see more down right now. And so that's why I'm going to be leaning towards the upside. All right, guys. Well, remember to come on over and check out our Black Friday sale. We still have that running until December 1st. It's simplertrading.com/flash sale. Hope you guys enjoyed that. Basically, that is going to be what is the Santa Claus rally and what was my outlook for 2024 going from this point forward. Let's see how well this ages, and we can talk about this about maybe a little over a year from now, or 10 months or so, and we'll see how it did. Until then, I hope you guys are doing well. Happy Thanksgiving. Hope you enjoyed the Thanksgiving, and we'll see you later in December. Take care.